Welcome to Late Night Ledger, your calm, data-driven companion to unwind with before bed. Every evening we slow down, take a breath, and explore the rhythmic pulse of the cryptocurrency markets. Not just what moved, but why. From price charts to policy, from volatility to vision, let's make sense of it all together. So settle in, exhale, and let's begin. Today's market snapshot. Still waters. As we wind down this Friday, let's start with the numbers. Measured, meaningful, and quietly telling. Here are the latest end-of-day prices for the top 5 cryptocurrencies. Bitcoin, BTC, is closing around $104,625, down 0.4% for the day. It traded between $104,005 and $105,136, with some tight intraday consolidation. Ethereum, ETH, sits at US $2,518.13, dipping about 0.19% since yesterday. Intraday, ETH ranged from 2,488 to 2,543. Like BTC, the volume has slowed, but the structure remains intact. Binance Coin, BNB, is almost unchanged on the day, $644.84 US, slipping just a hairline 0.005%. It moved between $638 and $646 in a fairly stable band. Solana, SOL, comes in at $145.45, marking a 0.67% daily loss. It held support around $143, bouncing off lows of $142.99, with a top near $147.36. XRP is sitting at $2.16, flat for the day. It briefly tested $2.18 on light volume and touched a low of $2.15, but held its ground admirably. Market texture, volume across major exchanges was slightly below weekly averages, suggesting end-of-week caution rather than fresh conviction. The crypto fear and greed index clocks in at 50, perfectly neutral. Neither euphoria nor despair, just reflection. And perhaps that's where we are in the cycle. Less about frenzy, more about foundations. Weekly context. 7 days, 5 stories. Let's walk back through the week, starting with Friday, the 13th of June, up through today, Friday, the 20th of June. In 7 days, a lot can move, both in price and in narrative. 1 Bitcoin, BTC, plus 1.2% weekly gain. Last Friday, Bitcoin sat around $103,350 US. It's now at $104,625, having held above $105,000 for parts of the week. Why? 2 reasons. First, growing expectations that the US dollar may continue weakening due to upcoming fiscal pressures. Second, ongoing accumulation by institutional funds, as highlighted by a quiet rise in GBTC inflows this week. BTC's movement hasn't been explosive, but it's been persistent. 2. Ethereum, ETH, plus 2.7% weekly rise. ETH gained from approximately $2,452 to $2,518 this week. While Ethereum itself saw modest action, the real story was Layer 2 activity. Coinbase's L2, posted a new record in weekly active wallets. Starknet's upgrade, Cairo 1.1, hit mainnet Tuesday, enhancing execution speeds. ETF's rise is a reflection of the network effect working quietly in the background. 3. Binance Coin, BNB, plus 3.2% weekly climb from $625 to $644. BNB's strength this week was tied not to hype, but to progressive regulatory thaw. 3 new jurisdictions in Europe greenlit Binance derivatives trading under revised MiCA alignment. Binance also unveiled its new on-chain proof of reserves, which has begun to attract more cautious institutions. When trust improves, so does BNB. 4. Solana, SOL, plus 1.1% for the week. SOL edged from 143.9 up to 145.45, but it did so with far more on-chain activity than the price suggests. The Helium network began migrating new hotspots to the Solana chain. DePIN use cases, such as file sharing and geolocation, are growing as Solana positions itself not just as an Alt L1, but as a platform for real-world physical decentralization. So the modest price gain doesn't capture the tech pulse underneath. 5. XRP, plus 4.8% this week. The standout starting from $2.06. XRP now holds at $2.16. Several tailwinds came together. Institutional wallet activity rose as large holders transferred XRP into multi-sig cold wallets. The XRPL summit in Tokyo concluded with ambitious product roadmaps, tokenized assets, AI-driven routing, and even whispers of central bank partnerships. Add to that growing chatter around a potential XRP ETF filing, and you've got a cocktail for quiet accumulation. Over the last week, it's tempting to see these moves as mild, but consider this. All 5 assets posted weekly gains. None of them were driven by meme frenzies or headline pumps, and all of them showed signs of fundamental use case expansion. This week wasn't about price fireworks, it was about measured steps forward. And in crypto, measured progress, that's often the start of the next big thing. US macroeconomic drivers, signals from the summit. Even in the decentralized world of crypto, macro still matters. This week, the signals from Washington and Wall Street offered subtle but firm influence. The Fed's steady hand on Wednesday, the Federal Reserve held interest rates at 4.25 to 4.5%. No surprise there. But the language was telling. While Chair Powell hinted at 2 potential rate cuts by year end, he stressed that inflation remains sticky. What this means for crypto. Short-term traders scaled back their July rate cut bets, but Bitcoin barely flinched. This shows growing maturity in the space, where rate outlooks aren't dictating volatility as much as before. Drift. The US dollar index dipped to 101.7, influenced by new trade tariff tensions and rising fiscal deficit projections. The term Trumponomics returned to headlines as markets questioned long-term budget sustainability. In response, assets like Bitcoin gained subtle ground, playing their role as a hedge against sovereign currency devaluation. Genius Act passes Senate. The Genius Act, the US's most comprehensive stablecoin bill yet, passed the Senate this week. It mandates one-to-one asset backing, audits, and issuance controls. For stablecoins like USDC, it's a tailwind. For those like USDT, it's a pressure point. But for crypto as a whole, it's a regulatory green light, a step toward trust and scale. Key market developments, building while quiet. This week brought fewer headlines, but plenty of building. Circle Goes Public Circle, issuer of USDC, made a powerful debut on the NYSE. Valued at US $32.8 billion, the move symbolizes crypto's steady migration into institutional markets. Investors aren't just betting on coins anymore, they're backing the infrastructure. Eyes tokenized stocks. Coinbase applied to the SEC for a product offering tokenized versions of equities. These could trade 24/7 on-chain, giving investors new access to familiar names like Apple and Tesla. This is tokenization in action, not theory. XRP, Momentum Builds XRP, rose nearly 5% this week, aided by summit announcements, tokenized carbon credits, AI-powered routing. Rumors of a spot ETF application. Institutional wallets moving XRP into cold storage. It's no longer about lawsuits, it's about infrastructure, access, and scale. Calm reflection. Everything moves in cycles. Crypto often feels like chaos. Prices bounce, news breaks, regulation looms. But if you sit quietly and zoom out, you'll notice a pattern, a cycle. We've seen it before. In 2018, after the ICO bust, Bitcoin spent 14 months consolidating. The market was quiet, but infrastructure matured, like custody, compliance, and cold wallets. In March 2020, when the world panicked, BTC dipped below US $5,000. That very moment marked the birth of the 2021 bull run. In June 2022, after Terra collapsed, the noise disappeared, and what replaced it? A rise in layer 2s, liquid staking, and tokenized treasuries. Now, in June 2025, it's another quiet, another lull, another moment of building. Cycles don't just end, they turn. Silver linings, signals of a stronger future. Even in a still week, we're seeing signs of life. Ethereum Layer 2 ecosystems are now attracting over US $28 billion in TVL, with Base, ZK Sync, and Starknet leading the charge. Bitcoin's hash rate hit a new all-time high. Miners are expanding, not retreating. USDC adoption is rising in Southeast Asia and South America, replacing dollar banknotes with mobile wallets. And venture capital is quietly returning, as 16Z announced 2 new Web3 seed deals this week in identity and AI-driven smart contracts. None of this makes headlines, but all of it builds tomorrow's rally. Hot takes, not advice, just a thought. But where I'm not like mine either. This phase, the quiet growth, the soft policy alignment, the early product market fit, this is what happens before Brexit. The world catches on. So if the Fed cuts once or twice, or if the House passes the Genius Act next month, or if an XRP ETF hits headlines, that quiet market, it won't stay quiet for long. Thanks for sharing your evening with us on Late Night Ledger. Whether prices rise or fall, remember, volatility is just movement, not meaning. We'll see you tomorrow night with more insight and more calm. Sleep well, and may your confirmations be fast and final.